I think one thing is for sure, there's a deep commitment within Africa to do business within Africa. And if you look at Africa's intra-Africa trade, it's the lowest in the world. On average, we're trading about 11% Africa with Africa. And if you look at the global statistics, they're very clear. Europe trading with Europe is 65%. America trading with America is 45%. Asia trading with Asia is 25%. And Africa is really not trading with Africa. We do more trade outside Africa than inside Africa. The commitment that we saw from the presidents signing the CFTA in Rwanda a few months ago, and very quickly the ratification for 3 countries in literally a week, tells you a deep commitment from African leaders that, guys, we need to trade ourselves out of trouble. That is the fundamental bottom line of this whole CFTA, and we're very excited that we are putting it in fast motion. I was actually even telling the Ghanaians that Kenya and Ghana were the first countries who ratified and deposited the instruments of ratification in Addis at the AU. Maybe we should just have a bilateral. Why do we wait for that 22 number before we start trading with each other? And you know what? African industry today is desperate to have an expanded market within the continent.
Beyond the desperation, what already is actually happening practically? Let's now leave out the politicians as far as the signings are concerned. Since the signing of the Africa Continental Free Trade Agreement, what has already happened with exporters, the business community here?
Well, the sentiment is very positive. Everybody is looking at how to, when to, where to. So we're all looking at, maybe we should be looking at our supply chains differently. Maybe we should be expanding capacity in our factories because the continent gets open and I have a huge market opportunity. Should I be located in the marketplace? The few gray areas or the challenges seem to be on the logistics side, that how do I service an order out of West Africa sitting in East Africa, and maybe the logistical nightmare to get goods across, and maybe if I have to go through, by boat from the Cape and all that, it might take too long. So people are thinking, and everybody is thinking that maybe we should probably be looking at either expanding capacity and bringing economies of scale in your factories, because running in isolation, I think industry has missed out the scale component. But besides the scale component, we are now also looking at the scope component. So what is the economies of scope for us? Should we be located, or should we be having warehouses, or should we be having satellite production units and things like that? So I think every industry in Africa today is back on the drawing board because of this new opportunity that is unveiling in front of us.
Right. As we sit on the drawing board, I want to understand or read your thoughts concerning the issue of the reported trade wars that are happening across international markets. We see US, China. How much of that will actually eat into our international exports and trade?
Well, I think you're right in saying that for the last 30 years we've probably been looking at a very different mindset. All of us in Africa, we've been thinking about globalization, liberalization, free market ideology, and it has been programmed into us. And all of us have actually accepted that that's the new world trade order. But that world trade order is now getting threatened with Brexit, for example, or with the US having this heated trade war with China. And we are actually in the continent feeling that, was free market ideology the correct ideology, or is this new protectionism which we are noticing in the West largely the right ideology? So it's giving us different signals, and those signals are dangerous because we are all programmed right now to actually work in a free market economy. But on the other side, on the flip side of the coin, we're noticing massive protectionism. And the architects of liberalization, globalization, free market ideology are the ones who are actually strangling the same ideology. And I think for Africa, a lot of it is wait and see, but I don't think we should stop because for us, it's that market expansion. For us, East Africa is 170 million people. For us, Africa is 1.2 billion people. To me, that's a huge market opportunity. So let's just look at our core business, and let's look at ourselves, and let's look at an expanded pie, and let's get a bigger slice of pie, because that pie rightly is served from China and India and from imports. But can we start serving it from Africa?
Right. And as we speak of the global trade disputes, even back here closer home within the East African community, there still have been reports of trade disputes. We remember Tanzania and Uganda, the sugar issue, Tanzania banning some exports of carrot from Kenya. How much of this is actually affecting the trade?
Well, it is affecting the trade, But I would say that we probably take 10 steps forward and take 3 steps backward. But this is bound to happen when everybody is now thinking on this protectionism. And what's happening out there is also not helping, because it's putting a new idea in everybody's mind that maybe we should go back to the Cold War in the sense that we we should have walls around our territory. But by and large, the business community is not for it. And in certain instances probably is. If you look at East Africa and look at the Northern Corridor countries, that's Kenya, Rwanda and Uganda, I mean, we travel today on an ID that tells you the commitment of our integration process and how we want to open our markets. At the same time, we allow each other to work in each other's country, free movement of people, which is a big thing in any liberal economy or in any customs union. Yes, we understand that Tanzania is taking time to decide whether they want to come to the fast track or they want to stay in the slow track, but it doesn't matter. As far as we are moving forward, they can always join the train and come on board when they have done their internal due diligence on the impact on their economy. By and large, I can tell you one thing, their impact on their economy will be very little. If you look at Uganda, Kenya is the largest investor in Uganda today. And we're looking at it as an expanded opportunity and not an expanded threat. So I think it's a mindset issue.
Right. One of the biggest stories right in Kenya today, as far as investment is concerned, is definitely the issue of the 16% VAT on the fuel. And of course, the country is waiting. Investors are waiting, as far as the president is concerned, to sign or just not sign that particular bill into action. But I want to read your thoughts on what already this is having as far as impact is concerned and the foreseen impact if the status quo remains.
Well, if you look at it, I think there's been a lot of misunderstanding. The 16% VAT in the manufacturing space is just an input-output cost. So it's a pass-through cost. It's really not a cost of doing business. It is a cost of doing business for bottom of the pyramid, for the consumer per se, who don't have an input or an output cost so they can offset their input cost. But if you're in industry and you're manufacturing and fuel is a component of your utility, and that VAT component is a pass-through cost because you actually offset it against when you charge VAT. So it does filter down to the consumer paying the brunt of it, and yes, the consumer will get impacted, and yes, the consumer will feel the pain because that's extra cost of doing business for that consumer. So I think, really speaking, I don't think the goods on a supermarket shelf will increase in price because the manufacturers have already offset that VAT. But yes, I do see that the back pocket of that consumer might be impacted with the extra VAT on his transportation to work and this, that and the other. So his disposable income gets affected. And that disposable income is what everybody's talking about, that I'm worse off, not better off.